Good morning, YouTubers. Thank you very much for tuning in today. This is David Grossman, the Mortgage Mensch, for your update on September the 11th, 2007. I sent out an email last night to a number of real estate agents and got some feedback that they thought the article was pretty good. Let's see if the glasses are straight there. That's a little better. So I thought I would send an update up on YouTube just to summarize what I had put in the email. The title of the email was called Eliminate Virtually All Market Risk with a 10-Year Fixed Rate Mortgage. So keep in mind, listeners, that this is as things apply in Canada, not necessarily in the U.S. Of late, a number of people have recently asked me, well, at least a couple of people anyway, said that they were thinking about buying a house this fall, and now with everything that's happening in the United States, they're wondering if they should hold off just to see what happens. And my answer to them is that if they can afford to buy a house now, that they should go ahead. Unless they're buying with cash, most people do need a mortgage, and mortgage rates are still relatively low. You can get a 5-year fixed rate mortgage for about 5 3/4. You can get a 10-year fixed rate mortgage or a 15-year fixed rate mortgage for around 6%. And the number one factor which affects affordability of real estate really for most people is the mortgage rate. So if you want to sit around and watch to see what happens with the market thinking that maybe house prices will drop, well, house prices just seem to keep going up and up and up, and in Canada anyway. And I don't, and I know that that's not going to continue to happen forever. But the biggest exposure that I do see for people who want to buy a house and who will need a mortgage is the interest rate, as I mentioned. And there is no short-term pressure for interest rates to go up, but who knows what will happen in the future. I mean, the Canadian economy is hot. I did see one article in the paper that even though the Bank of Canada held off increasing the overnight rate last week, when originally it was thinking about increasing the rate, and they did hold off because of recent volatility in the stock market. So that situation could change in the future. So in a few years, where will interest rates be? Who knows? So if you want to play it safe, take a fixed rate mortgage, fixed term mortgage for 5 years or 10 years, and you could, if you want to take it for as long as 10 years, you could practically ride out one complete economic cycle, because who knows what will happen in the future. Canadian economy is strong. Jobs are at unemployment is at a low. It hasn't been this low in about 30 years. House prices, as I mentioned, keep going up. And one of the other important factors I'll mention is that there are also a lot of good mortgage products available, longer amortizations, mortgages for self-employed people who may not be reporting a lot of income. So a lot of good products available, opportunity for people to get into the market now, opportunities that are there now that may not have been there a few years ago, and may not be around in a few years from now either. So if you can afford to get in the market, if you want to buy a home for your family to live in, and you're thinking long term, then I'd say go for it. So that's my report for today. Thanks a lot for tuning in. Let me know if you have any questions or comments. Look forward to hearing your feedback, and have a great day.